Good afternoon. We are Team 6. Today we would like to introduce to you to a very, very excellent investment opportunity in a company called CJ E&M. CJ E&M currently operates in 3 core businesses: media, music, and also pictures. The company is currently trading at historical highs, with the last closing price being 96,000 Korean won. However, our team believes that there will be additional further upside potential and growth for this company. And of course, we recommend you to buy this stock. Now let's take a look at some of the key highlights of CJ E&M. First, we believe that there will be an upsurge in drama contents for CJ E&M. The company projects that in the next 3 years, it will double the production of yearly dramas to 34 by 2019. And it will be able to do so because of the following 3 reasons. 1, it has already created a production studio in Ilsan. 2, the recent IPO of Studio Dragon will increase the funds available for business expansion. And all of these funds raised for business will lead to the acquisition of other studios, smaller studios, as well as an increase in overseas productions. Now, Sana, could you take us through to the next highlight?
Of course. Next, we believe there would be an increase in content exports through stronger cooperation with global OTTs. While primarily program providers were reluctant to supply their contents to OTTs like Netflix, the stagnant growth of TV advertising market has driven program providers to partner with OTTs. Actually, the number of subscribers of Netflix, especially foreign subscribers, has dramatically increased, and with all of these factors into consideration, we projected our CJ E&M's overseas content sales as follows. And here, we are also able to see the entire revenue forecast for media division, as well as EBIT and EBIT margin. Now, Joo-Chung will discuss the next highlight.
Thank you, Sana. CJ E&M's music division has continuously pursued a strategy of growth through synergies with its media division. But that strategy has been realized now. Let's take a look at how. Firstly, CJ E&M began to raise the proportion again of affiliated labels since 2016. Likewise, EBIT and EBIT margins demonstrated similar upward trends. Then, how did EBIT margins improve following the expansion of in-house labels? First, managing in-house artists gave CJ E&M the intellectual property to the artists and their music. This enables CJ E&M to broaden its revenue streams. More importantly, CJ E&M has acquired the ability to maximize the impact of management business through synergies between its media and music division. Management division by nature sees a gradual decline in margins as the name value of the artist rises. However, CJ E&M has been able to maintain high margins by continuously finding rookie talents with high prospects on the programs like Produce 101. As these shows involve audience participation, CJ E&M is able to reduce risk of failure by investing only in talents with proven popularity. And since these artists are always at the beginning of their debuting career, so profit distribution is favorable to CJ E&M.
Thirdly, according to Korea Creative Content Agency, the majority of music listeners acquire information through TV programs, and this only further illustrates CJ E&M's ability to leverage synergies with media division, which operates its own music TV channel Mnet, and also produces many strong content and dramas, which provide many original soundtrack opportunities. Lastly, CJ E&M also operates its own music B2B distribution business, which also enjoys synergies with the media division. For example, in 2016, over 70% of music distributed by CJ E&M was media related. This allowed CJ E&M to be the #1 player in the music distribution market in 2016. With these analysis, we were able to project revenue, EBIT, and EBIT margins for the music division, and we believe that the synergy effect will allow strong growth in the near term. Young-Kyun will present our final investment highlights.
Thank you, Yeji. The last investment highlight is the improved performance and potential in overseas film business. In particular, we expect that the company's revenues from the Southeast Asian film markets will greatly increase. Since Vietnam takes up the majority of CJ ENM's presence in the Southeast Asia, we did our analysis focusing on Vietnamese film market, which is grown robustly with increasing GDP. We believe that Vietnam's film market will continue to expand because it has the lowest average number of visits and thus has strong potential for further growth. We believe Vietnam will grow similar to China, and by 2019 will have 0.4 visits to the movie theater per person. Now you may be wondering whether the growth of Vietnamese film market will in fact translate to improved earnings of CJ ENM's film business. But CJ ENM has already released strong hits in Vietnam, thereby demonstrating its strong track record. Also, CJ CGV continues to augment its position and market share in Vietnam. These factors will serve as strong tailwinds for CJ ENM, which has announced that it will release 20 overseas films per year by 2020. Lastly, we are able to project EBIT and EBIT margin as well. This is a clear signal for buy for CJ ENM. Next is our financial analysis.
The graph on the left shows the projected revenues for each business segment, and the key growth drivers are first, outstanding core media content, and second, robust music sales from synergies with media division, and third, expansion for overseas films. In 2019, we believe CJ ENM will generate sales of 2,069 billion Korean won. We also projected operating costs, and the EBIT and EBIT margins will improve significantly in the projection period due to the following three factors. First, higher sales from exports of existing content library without additional production costs. Second, higher margins from music division. And third, high success possibility of CJ ENM's films released overseas. If you take a look at our financial ratio analysis, especially on profitability, you can see that the projected EBIT margin will improve in the projection period due to high operating leverage.
For valuation, we use sum of the parts at EV/EBIT level to get a target price of 123,000 Korean won, which translates to a 28% upside. We chose to forecast the company's near-term EBIT by business segment, and we forego the EBITDA and choose EBIT because DNA is not available per business segment. Also, we forego DCF and choose SOTP. So first, we calculated the operating value of each business division by multiplying the average EV/EBIT multiples of relevant peers to each business division. Then, we estimate the non-operating assets of company, and we reflected a 30% discount because the immediate conversion to cash of the entire stake is not as difficult to achieve. Lastly, we also consider non-equity claims, and this gets us to a target price of 123,000 Korean won. We are also able to perform the sensitivity analysis on Netmarble share price. To the left is the scenario in which Netmarble share price has fallen 10%, and the right side table shows a 10% increase. Even with the bear case, this still supports our buy recommendation. To supplement our SOTP valuation, we also looked at price to earnings. For our PER multiple peers, we selected global contents companies, matching our comparison criteria. Thus, with a 16.2 times PER, we arrive at a target price of 121,700 Korean won.
Yes, our final presentation portion will be on risk. As with any investment, there are several risks involved. We chose to specifically focus on one primary risk, which may be of great concern to you investors. That is the IPO of Studio Dragon. So there is a risk being that investors who have stakes in CJ ENM will choose to, as an indirect investment in Studio Dragon, will opt to directly invest in the studio stock due to its recent listing. However, this should be of no concern because ultimately, the performance of Studio Dragon is, as a full subsidiary of CJ ENM, be a benefit to CJ ENM. And secondly, the opportunity cost of switching from CJ ENM to Studio Dragon will be greater than the expected benefits. As we have laid out in our presentation, CJ ENM's other businesses, namely music as well as the overseas film business, will drive the value of this stock higher. We believe that you will lose more by switching to Studio Dragon than by staying in CJ E&M. We conclude our presentation with a reiteration of our stock price, target stock price of 123,000 per one, and we recommend you to buy the stock. Thank you very much.